Thank you all for coming today. My name is Jett. I'm a vice president here at the FCC. And just a few quick announcements before we start. First of all, on your place settings, you may have noticed a ticket to the Hong Kong Maritime Museum. We are very grateful to the museum's chairman, Richard Hex, right here, for making these available. And if you'd like to know more about the pivotal role that shipping has played in the development of Hong Kong, the Maritime Museum is well worth a visit or a revisit if you've been there before. It's just down by the Star Ferry, and it's really well done. A few other things. Please do silence your phones if you haven't already. I wanted to let you know about a few events we have coming up in case you're interested. Next Monday, we'll have a club screening, a documentary called Century of Women, which is following 5 women who are 100 years or older, reflecting on their experiences coming from India, Turkey, Cuba, Israel, a few other places, and how they reflect the social changes in the past 100 years. Next Tuesday, the 26th, we have a club lunch on Formula One featuring Matthew Marsh, who I think is also here today. No? But that's always a sellout, so do be sure to sign up for that as soon as you can. And then next Wednesday, the 27th, we'll have a club lunch talking about the book The Wolf Economy Awakens, which is about the economy, the digital economy specifically of Mongolia, which is a country that we do not talk about enough. 2 other things quickly. If you are an FCC member, a reminder to please fill out your membership survey by the end of this month. There are some great prizes for participation, including a year's free membership, so don't forget to do that. It's also available to spouse and partner members as well. And if you're not a member and you're thinking about joining the FCC, we do always welcome new applications. As you can see from events like this, there's a lot you can get out of FCC membership. So if you have questions about that, you can talk to our new general manager, David Breitling, who's right here, our president, Lee Williamson, who's also here. You can talk to me, you can talk to Tim, and any of our staff members as well can give you more information. All right, so I will get right into introducing our great panel of speakers today, starting with Angad Banga, who is the COO of the Caravel Group, the Hong Kong-based diversified conglomerate, which includes Fleet Management, the world's largest ship management companies managing over 750 ships and 27,000 seafarers. He is also the current chairman of the Hong Kong Shipowners Association. Next, we have Olivia Lennox-King, who is the COO of Cetus Maritime, a shipping company which operates a fleet of over 40 bulk carriers through a worldwide network of offices. She is a qualified solicitor and is responsible for overseeing Cetus's vessel acquisitions as well as legal and corporate matters. And finally, we have Tim Huxley, founder and chairman of Hong Kong-based shipowner Mandarin Shipping. He has spent over 40 years in the shipping industry as both a shipbroker and ship owner, and in addition to Mandarin Shipping, is also a director of a number of other shipping-related companies in Hong Kong and Europe. And of course, he is also the vice president of the FCC. So I'll start off with a few questions, and then we'll open it up to the audience as well, so please think of any questions you might want to ask. But just to start off with Tim, the major reason shipping is in the news right now is because of what's happening in the Red Sea. Can you tell us a bit about what has been the impact on shipping markets? Is there a solution in sight, and how is it affecting shipping beyond the Red Sea?
Thanks, Jen. Great to be here. Welcome, everybody. The Red Sea, yes, that's what is dominating the news at the moment. It's, it really sort of kicked off with the strike on Gaza last October, from Gaza last October. It's having a huge impact now, and of course the tragedy is that now we had 3 seafarers killed just a week or so ago. The impact on shipping, and people are talking about, oh, there's going to be a crisis, goods aren't going to flow. It's not that bad. And there was a very good article in the FT actually a couple of weeks ago saying you can be complacent about this. I mean, a couple of economists from Goldman Sachs said that the impact on transport costs will be about 0.1 to 0.2%. So it's not going to be huge. And one of the reasons is that if you take one particular subsector of shipping, container ships, I mean, they'd had a boom during COVID, and everybody went and built too many ships. So what might happen is that this crisis, which adds 16 days to a voyage from Asia to Europe, what it might do is absorb some of this massive excess capacity we've got, so that the recession we were going to see in container shipping is not as bad as we were actually foreseeing. So the big impact, though, from a ship owner's perspective, is how it is going to impact your seafarers. Increasingly, ship owners are saying, we're not going through the canal. And remember, the canal was closed for 7 years, between 67 and 74, so we can survive without it. But it does add to distance, it will add a bit to costs, but the big impact that the ship owners are trying to mitigate is the impact it has on its seafarers. And I mean, Angad, I mean, he's got 27,000 seafarers. So it's talking to them and trying to make them feel safe, because you don't go to sea expecting to get hit by a drone.
Yes, Angad, could you talk about the impact on seafarers?
Sure, absolutely. Thanks, everyone, for having me today, and thank you, Jennifer. Thanks, Tim, and the FCC. It's a pleasure to be here. So before I jump onto that, maybe I'll just touch on a couple of points that Tim raised, which I think it's helpful. So if you just do the math around what Tim had said, 15 days on average increase in the voyage, and if you assume that's across the average fleet, bulk carriers, tankers, containers, they're consuming 30 tons of fuel oil per day at $650 or $700 of fuel oil per metric ton. Do that math, so you're $200,000, $300,000 incremental per over that 15 days just on fuel cost. If oil price comes down, that part comes lower, and then you basically have the freight rate that you're paying. So that 0.1 to 0.2% that Goldman Sachs is talking about, they're kind of doing this math and looking at the incremental cost on per voyage that goes through, and then what factor that goes to the end consumer. So really, that's the math that people are doing, and then it varies. Where you're coming from, around, if you think about the world, are you coming out of the Middle East, then going down around Cape of Good Hope? Are you just coming, around the coast of India, and you're supposed to go up there, or you're going down there? And that's where all these variabilities does come in. I think that's sometimes what people really don't understand, and why the impact could be so large. It's, as Tim said, we've lived without it in history before. Coming back down to the seafarers right now, and I think it's important to understand that most responsible ship owners and ship charters are saying we will not transit through the Red Sea and the Suez Canal because of the inherent risk that exists. It's been perceived that really the assets that are at risk are those that are U.S. owned or controlled, UK owned or controlled, or Israeli owned and controlled. But the reality is that's not what's happening. Targets, not from those countries have been hit. A lot of, really, independent nations with their seafarers on these ships, they're the ones at risk. And it's a scary place out there. They're not trained to be in a war zone or a conflict zone, and that's unfortunately what's happening. We are starting to see some I would say trade union related regulations coming through, which under the International Bargaining Forum, seafarers have the ability 7 days before entering the zone to say we will not transit, and so they have that right. And I think it's very important that the seafarers have that right today, because then they can say we will not go, and then it's the obligation on the owner, the operator, to basically repatriate the crew or transit around and find a solution. So I think that's probably been the best thing that's happened. But what the other area we're not talking about is when these vessels have been hit, and we can count a lot of them. The first time we've had fatalities, the mental health on the seafarers, the post-traumatic stress disorder, and all of these challenges, having dealt through all of this with COVID and not being assigned as key worker status and what they went through, and now what they're going through again, we really need to put the seafarer agenda top of mind and front of mind before anything else, in my opinion. Thank you.
And Olivia, what consequences have you seen as a result of this, or what else would you like to add?
First of all, thanks, Jennifer. It's really good to see lots of shipping faces in the room, but lots of you who aren't from the shipping industry. So good to see that we have more interest in what we do. I think not much to add. I think two very knowledgeable speakers on the subject. I would just say that for shipping, Tim is right that the consequences are not necessarily always straightforward in terms of how we look at the impact on shipping. Obviously, the impact on the world's consumers is one thing, but the impact on the shipping industry itself. The Red Sea is another example of whether we want to call it a grey rhino or a black swan, another event that shipping will have to adapt to in terms of how we trade. And because shipping is a supply-demand economy, we look at demand, obviously, for goods, but we also look at supply in terms of the number of ships on the water, but we look at latent supply. And when you have a fairly finely balanced industry, if you're removing supply from the market by having ships travel longer and increasing ton miles, then you will find freight rates rise. So I have been guilty of using this expression before, but we do sometimes say that shipping loves a war because disruption creates volatility, and volatility creates opportunities. So that's not necessarily maybe a PC way of looking at it from a shipping perspective, but just to say that not all black swan events are necessarily negative for shipping.
I could just add on that. The going around the Cape of Good Hope, as Angad said, that extra cost on fuel, it is offset by the fact that you're not paying to go through the canal. And the canal dues that the Egyptian government charges are actually linked to the price of fuel. So if the price of fuel drops, the canal dues will drop, so that it's always better for the ship owner to go through the canal. So there is that also. Right. And also, the big loser in all of this that's going on is the Egyptian economy, because they get 12% of their foreign currency earnings from canal dues.
Olivia, you mentioned black swan events. What's happening in the Red Sea is not the only thing going on right now. There's issues with water levels in the Panama Canal. There's pirate attacks starting up again near Somalia. And of course, there's also still the war in Ukraine. Coming so soon after the disruption from COVID, how has the shipping industry reacted to this ongoing series of black swan events? And also, how does it compare to the disruption during the pandemic? Is it at that level? Or is it more serious? Is it the same?
Ooh, a comparison is a bit difficult because I think no one saw the pandemic. You know, the pandemic hit every market in every way, and I think Angad alluded to it, but the biggest issue I think for shipping companies was crew welfare, crew changes, and that was an enormous challenge. And I think as an industry, I would say that shipping did remarkably well. We really, we showed our fortitude and our adaptability, which continues to apply. The war in Ukraine, again, not particularly expected. Shipping has adapted, particularly for dry bulk. We're sourcing elsewhere. We are increasing ton miles again. Disruption leads to inefficiencies, which leads to, as I say, latent supply changes. Obviously, we try to predict what's coming next, which is a fool's errand in lots of ways, particularly when you're looking at the current complicated political landscape. But I'd say that shipping, generally speaking, is very adaptable and has done a good job of absorbing these changes. And I think we have a lot on our plates. We have a lot more coming with environmental regulation. We probably have a lot more volatility coming with the US elections and the impact that has on the geopolitical space. So I expect shipping to continue to roll with the punches. And there's always a way. There's always a way for shipping to continue.
Tim and Angad, would you agree?
Yeah, look, I absolutely agree with what Olivia said. I think in her earlier statement, she said, at the end of the day, shipping is really just about demand and supply. And so when all of these black swan or geopolitical events and all of these things happen, it's going to affect one side, the demand or the supply, the demand for cargo, dry cargo, containerized cargo, oil cargo, and the supply of ships, what that does. And supply, being defined as Olivia said, is also the number of ships in the water, but also how long, time at port takes, how long it takes to go from A to B, and that utilizes the supply more or less. And all of this comes back down to that aspect of how we almost price the risk of some of these geopolitical events. What I think Olivia said, which I completely agree with, none of us knew how to price the risk of COVID because none of us had really seen a global pandemic. We had seen wars, we had seen crises, we had seen, all of that stuff. And that impact, the humanitarian impact on the seafarer, no one really quite understood. And again, people were so focused on their domestic economies when they were looking at what was happening, you almost forgot that you had 1.5 million people at sea that no government was really looking after them, and then we were almost reliant on the IMO to think about, okay, how do we manage this, and how do we get them home, how do we do all of this? And it's something that the industry, frankly, had never really thought about before, and I think was a really big rude awakening for us all, that hopefully we've all learned collective lessons between the industry and regulators.
Yeah, I mean, the seafarers were the real heroes during COVID. Ship owners, a lot of them made a fortune during COVID because of these dynamics when you had ships that instead of going in and out of port in 3 days were being stuck there for 6 to 8 weeks. That was taking that massive amount of supply out of the market. But Olivia and Angad, they're right. I mean, we can't predict any of these black swan events. The one thing that the ship owners always have control on, and certainly in my 4 decades in this business, nobody ever seems to really get it right, is actually the supply of ships. And so what happens is, and we had this in COVID, especially in container ships where everybody had made so much money, everybody rushed off and ordered new ships. So you went from having 8% of the world's fleet of container ships sitting in shipyards to 28%, and they're now all coming out, which is why the cost of moving a container from Asia to Europe, I mean, at the peak of COVID, was nudging $20,000 US. It dropped down to under 2,000, and now, partly because of the Red Sea, it's clawed back to about 4,000. So the supply of ships is the one bit that the ship owners have control of, but which historically, it's too tempting to go. I mean, everybody wants to go to a ship launching. Everybody thinks they're the only one who's going to order a ship, and it's never the case.
Speaking of shipbuilding, last week there were stories about American labor unions asking for sanctions to be placed on Chinese-built ships, calling in the U.S. They're complaining about alleged subsidies for the Chinese shipbuilding industry, and then there's also calls to revitalize U.S. shipbuilding generally. How likely do you think they are to succeed in getting the U.S. government to take action against Chinese shipbuilding?
What a load of rubbish that whole suggestion is.
Yeah.
I mean, you know, sanctions are bad for everybody, but in particular, the people who are going to get hit is the consumer at the end of it. It's going to add to their cost. The idea of revitalizing the US shipbuilding industry, I mean, it's got no infrastructure there. I mean, there is a point. It once was incredibly good. I mean, the world record for building a ship, going from keel laying to launching, is 4 days. Nowadays, it takes about over 20 months. And that was in the Second World War at a shipyard in California when they had to churn out ships because they were getting sunk in the Pacific all the time. But, so they did have a shipbuilding industry. Hong Kong had a shipbuilding industry. Hong Kong used to be the leading shipbuilder in Asia. And Whampoa Gardens and Taikoo Shing, they were shipyards. Likewise, Hong Kong used to be the world's leading center for ship demolition. But so these industries like shipbuilding, they're a sort of stage of the cross you go through as a country industrializes. I mean, I grew up on the River Tyne. There were 30 shipyards within walking distance of where I grew up. So the idea that to bring back that industry, I think, is a complete nonsense.
Yeah, I would agree. Actually, my great-grandfather was a shipbuilder in Taikoo Dockyard, so I can speak to that being true. But yeah, it's crazy. I mean, first of all, it kind of suggests that the US was still a shipbuilding power at the time China rose to prominence. But now, between China, Japan, and Korea, they take 95% of the world's shipbuilding capacity. So, I mean, I don't know where the US fits in there, but I do know that the US military employs Chinese-built ships. So that indicates to you that they really have no capacity to take on the world's commercial fleet. I think also it kind of sidesteps the fact that American labor unions have pretty strong protections in the form of the Jones Act. So in order to trade a vessel between 2 ports in America, it has to be built. The ship has to be built in America. It has to be manned by American permanent residents, and everybody involved with that chain, all the dockyard workers, etc., all have to be Americans. So there is already this protection there. But I think what it speaks to is not anything grounded in reality. This is madness. But it is interesting because I think it comes at a point in the geopolitical cycle, right? That the elections are coming.
Yeah.
Both Biden and Trump want to be seen as strong on China. And even if Biden says, I will think about this measure and come back to you, it's made a headline that the Chinese shipbuilding industry is, there's some sort of whiff of unfair competition, which is not the case. But I think it indicates that the next 9 to 12 months, we can expect a degree of volatility in this part of the world in terms of shipping, trade, globalization, all these themes coming up to the election.
I would agree with everything that was said. The only one additional piece I'll add is the latest numbers would suggest that 58% of all merchant ships being built, the order book, are being built in China. So if you think about an aging fleet and the fleet coming through, there's no way that you can stop Chinese-built ships from going anywhere, because 60% of the fleet in the future will be made in China. So then you're saying 60% of the world's fleet will not call the US, and then you're going to have all of these impacts on inflation to the end consumer in the US. So it's just not going to be possible. And the other thing which is to build ships, you need two things: labor, steel. Where is steel priced the cheapest today, and where's labor? And that's basically where shipbuilding will eventually go. The ships being built today we can talk about future ships with conventional fuel. It's not rocket science. And so, as Olivia said, this industrialization will then lead to shipbuilding happening somewhere else. And you're seeing it right now. You're seeing it in the Philippines. You're seeing it in Vietnam. So that's just natural industrialization.
Yeah, I mean, it's a great industry for an emerging economy because it's high value, high capital assets in US dollars. So it's a great way to sort of get hard currency. If you look back to the Asian financial crisis in '97, I mean, Korea really exported its way out of that, and shipbuilding was a key cornerstone of how Korea pulled back from that crisis. I mean, when I came to Hong Kong, I think China was ranked as number 8 in the World Shipbuilding League. I mean, Poland was number 4, and in 1978, Sweden was the second biggest shipbuilder in the world. So, as I say, it is just this evolution of economies, and that's what we're seeing now. So, any prospect of the Americans coming back as a global shipbuilder, I mean, I don't think in my lifetime I'll be going to a ship launching in America.
I wanted to ask about Hong Kong's role in the shipping industry going forward. There's been talk about its decline as a port, particularly tied to the decline in manufacturing here. How important is it for Hong Kong to retain its status as a leading port in order to be seen as a major maritime center? Start with Angad.
Sure. So it's a great question, and I think that's often one of the perceptions that those of us not necessarily in the container industry feel is being missed in Hong Kong, because everyone goes around, they see the container port, they see the container ships coming in and out, and for them that's all ships are. But people forget that there's coal going into the CLP power plant on Llama Island, or that there's the Shell refinery when you're going over the bridge and oil tankers are coming there and discharging oil cargo. And so the perception of the importance of a container port is one thing. There's obviously the reality that it does help stimulate the shipping industry as a whole when we look at it as an ecosystem perspective. But that's not the be-all and end-all as we look at it from a global maritime ecosystem. Let's just look at London, right? London is an international maritime center, and they don't have a port. Switzerland is one of the largest places for dry and wet cargo. It's a landlocked country. So there's this entire other part of the ecosystem that is not connected to the port, where Hong Kong, I believe, has a lot of potential to grow and build its maritime ecosystem. And if you look at what was coming out of the central government's 14th five-year plan and their kind of focus on what Hong Kong should be doing as an international maritime center, and then what the Hong Kong government and the TLB launched in December with their strategic action plan, most of that was not focused around the port. It's focused on all these other areas that I've talked about, because that really is the higher value added maritime services that Hong Kong should be positioned for. Maritime insurance, legal, broking, ship management. All of those activities don't necessarily depend on the throughput of the port or the number of container ships calling the port, or whether ships actually call Hong Kong or not. And I think this higher value maritime services piece, what London's done so well, what Switzerland's done so well, is really the focus of, I think, the Hong Kong government. And I believe that's the direction that Hong Kong should go. because we can't compete on labor costs, we can't compete on rent costs, we can't compete on all these things. Hong Kong is a high-cost jurisdiction, but we have a sound legal framework based on common law, super important for the maritime world. English speaking, very finance, technical, engineering background, so you've got a great talent pool. You've got technology coming from across the border, from the Greater Bay Area, all of that connectivity. So that connectivity for me allows us to be excel in the maritime services, not necessarily be the largest container terminal in terms of TEU throughput.
Yeah, I mean, lifting metal boxes on and off ships is not the high-value business that a city, a global city with the highest land costs in the world should be doing. And and it's really important to remember that if the container port in Hong Kong declines, that does not mean the role of Hong Kong as a hub for container terminals has declined, because 3 of the 6 largest container port operators in the world are headquartered in Hong Kong. I mean, that's Hutchison Ports, China Merchants, COSCO. So we've got more container ports controlled in Hong Kong than virtually any other port in the world. So that's always worth bearing in mind. And as ship owners and ship managers, it's probably quite rare that we actually have a ship coming to Hong Kong. But all of the infrastructure for the shipping industry exists here and has existed here for, really since Hong Kong was founded. I mean, that's what made Hong Kong the best deep water port on the South China Sea. 1949, all the Shanghainese migrated here, formed our world-renowned ship-owning cluster, and that will continue to grow. And so I certainly would not want to be in any other maritime centre than Hong Kong. When I was in Ningbo in December, I was at the launching of a ship that was ordered by a privately owned Hong Kong ship owner. It was insured through the office of the Hong Kong office of a renowned global insurer, financed through Hong Kong by one of the world's leading shipping banks. All the legal work was done by a Hong Kong law firm. It was managed by one of the world's biggest ship managers in Hong Kong. The fact that the owner also happens to be a member of the FCC was just an additional plus. But it just shows you don't have to go anywhere else to have all of those necessary things to tick the boxes of Hong Kong as a global maritime centre.
Olivia, would you agree?
I would. Actually, I think you guys stole all the talking points. So I'm not going to give you any empirical information. But I think one thing that we constantly miss in this argument, and this is true of Hong Kong generally, not even just shipping. Post-COVID, Hong Kong has struggled, right? We've had a really difficult time. Shipping is no different. Some shipping companies have left Hong Kong. That's a fact, sure. But it overlooks the fact that there are a lot of reasons that Hong Kong is still a great shipping centre that has nothing to do with the port, has nothing to do with scale. It has to do with, I think, Angad, you used the word earlier, ecosystem. We are a 150-year history of shipping in Hong Kong. There is a reason that you have 3 of the largest ship managers in the world based in Hong Kong. There is a reason that container ships are based here. And the corollary of this argument that Hong Kong is losing status is that Singapore is gaining status. And that in itself is also not entirely true, because there are things that Singapore cannot replicate that Hong Kong has. Some metrics, sure, Singapore is doing better, and I'm sure you're going to come on to this, but Singapore is doing better in terms of the port, in terms of green fuel transitions and technology, right? But Hong Kong still has a huge piece that Singapore is missing, which is the access to capital markets, the access to the listing board, and the access to China. China is now the biggest ship owner in the world by deadweight. The number of ship owners in China is bigger than anywhere else. And Hong Kong is still that bridge between the rest of the world and China. And that is the role that we need to continue to focus on. Becoming a technology hub, developing technologies that answer the questions that are bothering shipping at the moment, IMO regulations, green transitions. But there's a reason that we're all here, and there's a reason that shipping companies remain. And I think that sometimes gets lost in the argument. It's a bit too simplistic to say Hong Kong versus Singapore. Or to say, that Hong Kong shipowning or shipping industry is receding in any way, because, from my perspective, it's not.
The other thing that, if we look at the future as well, and, it's this whole concept of the US dollar being the sole currency used for trade. And more, you're seeing the CNH being used to facilitate cross-border trade for China. So is China buying, Saudi oil in CNH? Is it buying, something else in CNH? And that's such an important part of international trade. And that CNH is really, Hong Kong is the largest, offshore R&B center where that's happening. And a big part of what brings, shipping together is really the money, right? It's money to fund the asset. And so Hong Kong's got one of the best regimes for maritime leasing, and in a world where the balance sheet cost of ship finance on a bank's balance sheet is going up high with Basel IV and all these regulations coming through, maritime leasing becomes a more and more important part. That's here. The kind of cross-border trade element, not necessarily US dollars in the future, and where that happens, this happens here. And then as Olivia was saying, that exit from capital markets is important, because equity investors that invest in Hong Kong understand shipping. You've got very large listed shipping companies in the dry bulk space, in the tanker space, in the container space, listed in Hong Kong. And so equity market investors understand that. And I think that's really important, because part of the reason we're here is to try and educate people on what's really happening in shipping. And I think that is also very important, and Olivia touched upon it.
I have a couple more questions, including about the green transition, but I want to make sure we have time for audience questions. So I'll just end by asking, you all seem to be suggesting Hong Kong has a bright future in shipping still. Shipping markets globally are pretty vibrant at present. Do you see that continuing, and where would you put your money today?
It's going to be volatile. But that's the beauty of the business. If I had 100 million today, where would I stick it? I'd don't laugh. I'd quite like the idea of the bulk carriers at the moment. Modern bulk carriers, but with the idea that I'd probably flog them within about 4 years before I have to grapple with all of this decarbonisation and that my heavy fuel burning ship is not going to be able to trade. Because we don't really know what the regulations are going to, how they're going to play out. And I'd also, because everybody fell out of love with container shipping, I believe there will be a lot more near-shoring and friend-shoring of industries. So I think there'll be a lot more regional trade. So I'd go for the sort of smaller regional trade in container ships. Go on, what's you?
Well, I'm going to say, if I had $100 million, I'd put it in small dry bulk carriers, because that would make sense. That's my business, and I happen to think it's a good space to be in at the moment. Or I might actually, maybe to be different from you, I'd invest in a dry bulk shipping company, because I think dry bulk shipping stocks are undervalued at the moment. But to add a bit more maybe color to the discussion, I would probably invest in some efficiency technologies that are associated with shipping, because you touched on it. I don't know if we're going to talk about it, but shipping is facing an enormous challenge in terms of meeting the IMO regulations for decarbonisation. I don't think that we are going to do that, at least in the short to medium term, for the use of alternative fuels. What you'll probably see us do is retrofit existing technologies to make our current ships more efficient. And so any technology that actually delivers on those promises of efficiencies is a good investment as well.
I don't know where this 100 million number came
Yeah.
from, but if I
It's a round number.
if I had $100 million, and I see some of the bankers in the room smiling, if I had $100 million, I would put it in the bank. I would take 5.5% interest today, tax-free, go to sleep at night, not worry about what's happening in the world. The world's a really crazy place right now, and risk-free rate of 5.5% to take anyone from HSBC or Citi or here, if you give me 5.5% for that 100 million, it's yours.
That's
I'm not buying
the
a ship.
entrepreneurial flair we expect from the Banga family.
I was once told in Greece that I would never make a good ship owner. And I'm like, why wouldn't I make a good shipper? It's like, you've come from a finance background, private equity background, you guys do these Excel models and this, that, the other, and and I'm like, so that's how you're supposed to model an asset. He says, nope. What I do, I write it on a back of a napkin or something, is if the ship is losing money, I buy it. If the ship is making money, I sell it, and that's the only way to invest in shipping. And I kind of went away saying, I think he's probably right, but I don't have that risk appetite.
Let's take some questions from the audience. We've got a microphone that we'll pass around, starting over here.
Hi, I'm not sure if everybody is aware in this room, but we have some very contrarian views about how shipping should thrive on our panel today. Angad is a member of the Hong Kong Maritime and Port Board and has said some rather wonderful things about the new plan formulated by the government. On the other hand, Mr. Huxley, who was asked to speak at the Shipowners Association lunch recently, well, he rejected that view. I'm not sure where Miss Lennox-King sits on this, but I'd be interested to see a conversation about this.
Mike, thank you. Mike Grinter, one of the foremost maritime journalists in Hong Kong. Good to see you here, Mike. My view is that I always look back on the history of Hong Kong shipping and what happened in 1949 when the likes of the Koos, the Pows, the Tungs, the Chows all moved down here. They didn't have any government support, and they built up a shipping environment that certainly during the 60s and 70s, remember, Y.K. Pow owned more, when he was based in Hong Kong, he owned a bigger fleet than Onassis, Niarchos, and Lemos combined. And that was built without any government assistance. So I really do believe that, yes, we will have, and the government assistance are very welcome. But at the end of the day, Hong Kong shipping will survive and thrive on the entrepreneurial instincts and the skill set of the people of Hong Kong that made Hong Kong great, not just as a shipping centre, but as a city overall.
Sorry, I just wanted to point out that the last time Hong Kong did anything first in shipping was the Fair Winds Charter.
That's true.
Ever since then, we've had government, and we're always one step behind.
Well, yes, I mean, and Christine Lowe was the architect of that, and that was the Fair Winds Charter was a great initiative where it was a voluntary agreement that ships burnt low sulfur fuel in port here, and it really did help to clean up the environment. But you're right, that wasn't a global initiative at the time. We were way ahead of the game.
Other comments?
Yeah, I guess, Mike, it's a fair statement, and I think Tim alluded to this. Hong Kong has always thrived because of the private capital, the entrepreneurial spirit, the can-do attitude of everyone who has come here over the last 150 years. It doesn't matter what industry or what sector you've been in, and that's really what has, this freewheeling, capitalist society has created and built. And that's not with any government support. Other shipping hubs around the world have had that government support for a long time. And I guess that's just the nature of Hong Kong, how Hong Kong, the capital markets and how Hong Kong economy has worked. But now we are getting that support, and we're seeing the support come through. So I think the onus is now on us who've kind of created those businesses here to leverage upon the support that we are getting, which, yeah, we have not got. It's come late, and it's come after, but we're getting it now. And it's to kind of use that to double down and triple down, I think, is the way to move forward.
I'm not much to add. I would just say that I think shipping is, at heart, a private enterprise and a business. So, business will lead the way and should lead the way. Should the government be doing more to support the shipping industry, given that it's an enormous employer, given that it's a large part of the GDP? Yes, I think it should. But will it is another question. And, can we or should we expect that Hong Kong will step up in the same way that Singapore has, when Singapore has quite a different agenda? Hong Kong has, had the golden egg in terms of a very strong shipping industry for a long time, and Singapore has taken the initiative to grow it. So they're coming at it from quite a different space. So, but I think I agree with both of my fellow panelists in terms of where I see the driver coming from.
Other questions? Yes, over here. And then Philip. Oh, Philip, yeah, Philip, and then we'll go over there. Yeah. Sorry. Yeah. Either way is fine. Sorry. Okay. All right. Yes.
Hello. My name is Pia. I am a correspondent for Danish media, and actually I'm also a former officer in the Danish Merchant Marine, so I've been through the Red Sea and the Suez Canal a couple of times. And my question would go for that. Do you know how much this traffic has been reduced nowadays? And the other thing is, since I'm also a China correspondent, can the Chinese vessels still go through, or how is it? Thank you.
Do you know the figure?
It's 60% of the traffic has dropped going through Suez. So that's, it's still open. You can still go through it. But traffic's down 60%. Chinese vessels are going through. Costco is still putting ships through. The idea was that they weren't going to get attacked because they're not British, they're not American, they're not Israeli. But, I mean, I wouldn't risk putting a ship through there. I think you look back 10 years when we had the Somali piracy crisis. Chinese Navy did play a very active role in escorting ships through what was the high-risk area and everything, but they're not getting involved in this because you've got a much bigger geopolitical game going on here, and that has left the burden on others. We're dealing with the problem by just basically steering clear of the area.
Yeah, I would add that we fly the Hong Kong flag on a number of our vessels. So, I mean, Hong Kong flag would be considered by the Iranian intelligence to be part of China, and we won't send our ships through at the moment. There's a couple of reasons for that. One is that, shipping is not new to this kind of piracy or terrorist act, but in the past we've had many years since, I think it slowed down in 2011, Somalian piracy attacks in this area around Somalia and HRA. But that was quite different in that those attacks were coming from small vessels that attacked larger vessels. And so you could protect your vessels by having armed guards aboard. And indeed, many companies still use armed guards to this day. The difference here is that they're using the drone attacks and missiles. And two factors there is that one, no amount of armed guards will protect a vessel when it's attacked by drones or missiles. And the other is that you have no idea how reliable those are. So it may be that they don't want to hit the Chinese ship, but they do. And the resultant loss of life for your crew is, it's not something that a responsible shipowner will do right now, I think. And you've got to remember that not every vessel is manned by Chinese seafarers. And it seems that the Houthi have no regard for who's actually on board the vessel. So that's also, a fact of Chinese seafarers make up a very large proportion of the world's, as you know, seafaring fleet. So that's also something to think about when we think about, are Chinese ships safe? Are Chinese nationals safe through that part of the world? I would argue no on either count.
Anything to add?
No, I think the last part that Olivia said to me is the most critical part of this whole thing is the seafarers are innocent. And they're not involved in any geopolitical event, and they're the ones that no one's focused on here. Is it a American-controlled asset? What's the flag? But seafarers, doesn't matter. You could have a American-owned asset with, a American, well, no, but, an Indian seafarers. Or you could have a British-owned ship with Filipino seafarers. The seafarers are innocent. And I think that's why it's critical that we look after the interests of the seafarers first and foremost in everything that's happening. And after that, we plan what's next.
I'll go to Philip over here.
Philip Bowering. The first half of my questions have already been answered to some extent, i.e. that the state-owned shipping companies in China are still using Suez Canal. The second question I ask is, who's going to be next in terms of shipbuilding? I mean, we've gone from Japan to Korea to China. Who's next? And finally, it's a very brief comment. Why are we talking about Black Swan? We've had at least 7 incidents since 1956 of Middle East conflicts resulting in the disruption of maritime trade. So, I mean, it's not a black swan at all.
Yeah, Philip, I agree there. I wrote an article actually I got asked to write an article about black swan events. And I said, well, a black swan event is something that was entirely unpredictable. I'm afraid conflict in the Middle East, it's been pretty predictable for the last 2 millennia. So, we would know it's coming. Where's the next shipbuilding nation? I think China will probably expand a bit. India has had shipyards for many years. It has sadly never matched the efficiency or capacity or commitment or government assistance or whatever to really get the Indian shipbuilding industry going. So I still think that's a long way. I think for the foreseeable future, especially with the huge technical shifts you've got coming, it's going to continue to remain China, Korea, and Japan. But Japan is struggling with getting people recruited to work in shipyards. I mean, nobody really wants to work in a shipyard.
Other comments?
I would agree. I'd say that the only thing we might see in terms of the makeup of how ships are built is that when I say traditionally, for the last 10 years or so, China has tended to build the lower cost, simpler vessels. Korea and Japan have built the more expensive LNG carriers, pressurized, more specialist vessels. But now you are seeing China make more and more high cost, high value specialist vessels. And perhaps we'll see some of the simpler ships move to places like the Philippines. Some of the Japanese shipyards have opened secondary shipyards in Cebu, for instance, or Vietnam. But I don't see that being a huge shift. I see that being, as the China plus one story, more a diversification than a move away from China.
I agree with everything said. But I would say if you're taking that kind of 30-year view, maybe India gets there, maybe, in shipbuilding, maybe. 30 years.
All right.
I think we have time for one more question, I think in the back there in the corner.
Thank you very much for your sharing. And from a layperson, I would like to learn more because Olivia mentioned about technology. So you mentioned about efficiency, technology that you're looking at. And I'm wondering from the wider perspective, what other technology would help the sector to be more sustainable? Or do you anticipate there's going to be a Tesla equivalent coming into the shipping market that will completely revolutionize the design and building of your ships?
Who wants to take this one?
Well,
directed
is
to
there
you,
a
no?
Tesla moment coming? I mean, I wouldn't be seen dead in a Tesla.
No.
But I mean,
I don't think so. Look, that's a very big question because it's something that we're grappling. We could be here for another hour talking to you about technologies that apply to ships right now. So maybe I'm going to leave the Tesla question to one of you two. But I think, as I said before, I think there are kind of two things that we're looking at the moment in order to reach our 2030 goals and beyond. Decarbonization, so the change to alternative fuels. And that is a key question for the shipping industry at the moment. The other is efficiency technologies, be that operational efficiency, so just-in-time arrivals, voyage optimization, or vessel efficiencies in terms of Mewis ducts fitted to propellers or paint to reduce, or bubbles to reduce drag and therefore reduce fuel consumption. My personal belief is that it all has to work together in us to get anywhere near our goals. So the larger ships need to start converting to alternative fuels, leading the way for the smaller, lower vessels. Everybody has to start using voyage optimization software. Everyone has to start, in order to bring your ships up to the level they have to be in the next few years, you're going to have to start implementing energy-saving devices, ESDs, and I know we're trying to stay away from acronyms, but shipping loves an acronym. So we are going to start using ESDs as much as possible because we have to in order to reach our targets. So with that in mind, I'm going to leave you guys to, do we see a Tesla moment?
I don't think we're going to have a Tesla moment. I believe what Olivia is saying there, these smaller incremental changes, like, for instance, paint systems, lubrication technology, propellers, reducing drag, a little bit of wind assistance, using sails and everything. All of those will massively reduce the carbon footprint of the industry. But in terms of all of these, of switching to, we're all going to be using methanol or hydrogen. I mean, the only truly green solution is nuclear. And that, we're a long way from that becoming implemented. So I think that it will be, it's really global decarbonisation. One of the things you've got to do is you've got to put in so much infrastructure, and you're going to need shipping to actually transport that infrastructure. So we've got quite a long way to go, but we're all making unbelievable efforts. Shipping generates 3% of global emissions, is the widely touted figure. For the value you get out of that, in terms of what you move and how that facilitates trade, globalization, and makes lives better, you're getting a pretty good deal on it. But we are so committed to actually doing a better job than we're doing at the moment. Angad, you got all these ships you're managing.
So I think everything's been really well covered. I'll talk about the Tesla thing in a moment. But the one thing that really influences the ship owner is really the bunkering infrastructure, right? So when you look at the decarbonization strategy, you're looking at well to wake and that whole end-to-end part. for the ship owner to drive his or her decarbonization strategy, they're kind of thinking what's available for me from a bunkering infrastructure in different ports around the world. And that decision is so uncertain right now because what's driving all of that is not the shipping industry, but those that are going to produce the different fuels, whether it's ammonia or ethanol or methanol, whatever it is, and then those providers of the infrastructure to then ultimately provide it onto a ship. And that's where I think the most uncertainty is right now that prevents ship owners from making those really big CapEx decisions on, what is the future or an intermediate vessel from a decarbonization or energy transition perspective. On your Tesla question, I would say there's I think there's a chance. I think you're already seeing, battery-powered autonomous ferries, right? You're seeing battery-powered autonomous river barges. So there's that stuff that's happening. Do I see it right now for the foreseeable future for, a VLCC carrying oil or a VLOC carrying iron ore to China? No, I don't. But I think if you get that technological breakthrough here, it's only a matter of time.
Yeah, could I just add one point that I think is really important for the audience, particularly non-shipping people, to understand, is that you drive your Tesla for 5 or 10 years. Our ships are expected to have a 30-year economic trading life, and they take at least 2 years to build. So the decisions that you make are very, very important. First of all, will this technology be the prevailing technology in even 2 years' time? And will this ship last me 30 years as an asset, as a trading asset, or will it be redundant? So those are, things that we're grappling with at the moment, massive capital outlays over uncertain technologies.
And that's why there's still so many conventional fuel ships being built. No one wants to take that risk today because you're not rewarded or you don't get adequate risk return to take that risk today.
Unfortunately, we have to leave it there because we're a bit over time. But I know we could talk about this probably all afternoon. But thank you all so much. This was really an interesting discussion. So please give them a round of applause.